Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi. It is 31st of May 2023 and here are our top stories for the day. IPL 2023 finally came to an end on May 29 with the Chennai Super Kings clinching its fifth win. The latest edition was remarkable for several records broken and milestone established on the field. But off the field too, the massive viewership numbers for IPL 2023 seems to have given its OTT broadcaster JioCinema a big push in its race for a place amongst the leader of India's OTT space. But is the Reliance-owned streaming platform ready to take on giants like Netflix and Amazon Prime? Debargya Sanyal checks out what's on the program for Jio.
Despite the rain-affected final match, the 2023 edition of the Indian Premier League delivered it all. Thrill, excitement, reach and revenues. No wonder its viewership numbers are over 4 times the size of the NFL Super Bowl. About 32 million concurrent viewers tuned in for the free-to-watch match, according to a spokesperson for Viacom18, a joint venture between Adani and Paramount Global that owns JioCinema. JioCinema reached 141 million viewership in April, the first full month of the tournament, going by Comscore data. Though there is some overlap between TV and streaming, you could say that Tata IPL 2023 reached over 600 million people. That's a big number. Over the years, the IPL has averaged about 500 million viewers across TV and digital. The IPL isn't the only prime content streaming on JioCinema. Its content library now includes big-budget films and series such as Vikram Vedha and Inspector Avinash. Popular Indian web series Asur has also shifted base from Sony Live, with its second season making a debut on Jio. Last month, Viacom18 entered an exclusive content partnership with Warner Brothers to host content from HBO, Max Original and Warner Brothers on JioCinema. And now, the streaming platform has entered a multi-year partnership with NBC Universal or NBCU, bringing thousands of hours of NBCU films and TV series, including Peacock originals, to India. From sports to premium and original content, JioCinema is pushing aggressively to grab a big share of India's OTT market. Recently, it also revealed plans to release as many as 100 movies and shows produced at a cost of Rs 2,000 crore over the next 18 to 24 months.
I think now they clearly have a strategy to go premium as well, which is why they tied up with, in the first leg, they tied up with content with studios like Warner and HBO. And currently, they've also announced this content partnership with NBC Universal. So clearly, the intent here is that JioCinema now wants to go, the premium way also in a very aggressive way. They also want to capture a large chunk of the premium audience, which is largely in terms of the urban households, which have a payment capacity as well. So they are now trying to build a strategy of AVOD and SVOD both put together.
There's no strategy. You just bulk up on content. So they have signed on HBO, they're signing on NBC Universal. They paid a bomb for the IPL rights. So they're throwing money at content. That's perfectly fine. Everybody does that in the beginning when they want to establish themselves. Because right now what IPL and everything else does is gets them a lot of attention and gets people to look at them. But what it will mean for the bottom line, only time will tell.
Even as Jio rapidly expands its content library, is it enough to take on OTT giants such as Netflix and Amazon Prime Video?
So I think the biggest risk here is in terms of the content cost, how much they actually pay foreign IPL content, how much they've actually paid for original movies or web series, everything put together. So I think the unit economics are not favorable, wherein you have one end, the audience is not paying too much in terms of ARPU because the country is price sensitive, and at the other end, content cost is just inching up. The second big risk is around user experience. Even if they have the expertise of investing into content, user experience goes a long way in terms of customer retention. Right? A lot more scope for improvement in terms of user experience. If you were to compare this to a Netflix, I think user experience still stands to be below par. So a lot of investments have to come if we were to retain a large customer base.
Experts also point out that Jio's expansion into premium content may lead to a conflict with its core brand values.
I think the big question is the branding. Do you go to Jio for premium content or do you go to it for free content? And Jio as a brand, when it launched on the promise of low cost. It was a penetratively priced product. So the alignment between Jio as the distribution platform or the pipe which offers you bandwidth and Jio offering HBO just doesn't sit together. I think that will be their big challenge.
Experts argue that while Jio is aggressively expanding its content, the platform needs to devise a more strategic approach in regards to its content relatability, unit economics, and user interface. Most importantly, Jio still needs to zero in on its core brand value and find a balance between premium and free content offerings.
JioCinema did not break new ground with its free IPL streaming, but its entry will make a big dent on the ARPUs of other OTT platforms, just like it did for the telecom players in 2016 and 2017. On the other side of the globe, the world's fourth largest economy, meanwhile, is facing a technical recession. Germany recorded a 0.3% contraction in GDP in the first quarter of this year. Among various reasons, a prime trigger is the ongoing Russia-Ukraine war that has disrupted the supply of natural gas. Germany is also one of the prime destinations for India's exports. So will the Indian economy take a hit because of recession in Deutschland? Tushar Verma reports.
The 3.8 trillion euro German economy is now in its second quarter of recession. According to the German Statistical Office, the end of 2022 saw a contraction of minus 0.5%. A few days ago, it was reported that the first quarter of 2023 also saw a contraction, although at a slightly decreased rate of minus 0.3%. It is interesting to note that since 2021, the German economy has had at least one quarter of contraction every year. In the first quarter of 2021, the GDP shrank by minus 1.5%. In the second quarter of 2022, it was minus 0.1%. But what is the Indian connection here? Exports from India to Germany have increased over the past 10 years. In fact, compared to 2012 to 13, there has been an almost 40% increase in exports. On the other hand, imports from Germany have not changed much. The imports amounted to $14.3 billion in 2012 to 13, and in 2022 to 23, it was $15.9 billion. That is just an 11% increase. Germany is India's third largest export market in Europe. As a share of overall exports, it accounts for 2%. So, with the German economy in a technical recession, will there be any impact on the Indian economy?
While of course you speak about Germany being one of the major economies, one has to also acknowledge that in its current circumstances, it's amongst one of the worst performing economies amongst the G7 nations. Of course, it's going to impact India from the standpoint of Indian exports. And if the consumption market is getting affected, right, quite obviously this export gets affected also. So in the next at least 2 quarters, I believe, the net order may just come down for India.
Among top commodities exported from India to Germany, the highest increase was in telecom in 2012 to 13. It accounted for $30 million. 10 years ago. In 2022 to 23, it accounted for $480 million. Coming to trade balance with Germany, India has remained in deficit in some crucial sectors. It is highest in aircraft and spacecraft parts, which is in a deficit of $1.64 billion. India is also reliant on imports worth $1.49 billion of industrial machinery for dairy sectors. Overall exports from India, however, may face only marginal impact from Germany's economic contraction. Which sectors in India will face the brunt of German economic contraction?
Over the years, certainly the trade linkages between India and Germany has increased, particularly in the automotive sector. Any slowdown in Germany is certainly going to impact at least the auto component manufacturers who have been supplying various kinds of components to German automotive sector.
From an apparel sector standpoint, there's huge export dependency that we have. We do have light equipments that gets sort of exported there. Now, overall, household consumption expenditure has come down. It's what the average German is buying, right? And more so specifically in the space of, say, leather goods or for that matter, apparel. Uh, these are some of the sectors that are going to get majorly impacted any which ways. And of course, there are those industrial goods that we export to them, which will continue to get impacted because the net output is reducing any which ways.
Coming to the European Union, India's trade volume with the continent is substantial. In 2021, it touched 41 billion euros. Experts point that the impact on India's export and overall trade will be larger if Germany's contraction spreads to other EU countries. Europe accounted for about 17% of India's overall goods export in FY23. Another major European economy, the United Kingdom, narrowly missed recession. It recorded a mere 0.1% growth in the first quarter of 2023. So, is there a chance of German economic contraction spreading to other European countries?
Germany is the largest economy in the European Union. And of course, it has a fair amount of backward-forward linkages with other economies in the Europe. So a slowdown in the European economy certainly will have implication for many other economies in the Euro. If a slowdown in Germany, if finds a reflection in broader slowdown of the entire European Union, then it means a significant impact on India because if we consider EU as one bloc, then it is a very important trade partner of India.
Since the year 2000, cumulative German investments in India have been $13.6 billion. Experts say if India's economy continues to do well, German investments in India will reap advantages. However, that's not going to be the same for Indian exports to Germany in the medium term.
So the good news is recession in Germany alone will not significantly impact India's merchandise exports. Back in India, shares of Gautam Adani's conglomerate are clawing back from an epic rout after a Supreme Court panel found no evidence of regulatory failure or market manipulation in stock prices. Can the billionaire now convince investors and lenders to infuse fresh capital in the group? Besides, how does the road ahead look like for the group stock? Nikita Vashisht answers in this report.
Shares of Adani Group companies have seen a swift rally ever since a Supreme Court-appointed panel submitted it couldn't pinpoint regulatory failure regarding allegations of price rigging in Adani stocks. Since May 18, the shares have surged up to 39% against the 2.5% rise in the Nifty 50 index. The combined market capitalization of Adani Group grew by 1.5 trillion rupees during the period, helping the group re-enter the 10 trillion rupees club. Analysts believe the SC panel's findings could support the group's fundraising plans worth 29,000 crore rupees.
There is a stamp of approval that there is no corporate governance, misgovernance taking place. So I think that will lead to resumption of them being able to raise growth capital, which will support their business operations.
Earlier in March, US-based GQG Partners acquired a stake worth almost $2 billion in 4 Adani Group firms. The value of these investments is now over $3.5 billion. On May 23, the chairman of GQG Partners, Rajiv Jain, said he plans to invest more in Adani companies. That apart, according to a Business Standard report, Abu Dhabi Investment Authority, International Holding Company, and the Hinduja Group have shown interest in the group's forthcoming share sale. Deven Choksi of KR Choksi Holdings believes the interest underlines investors' growing confidence in the Adani Group's infra assets, which remain one of the best long-term investment opportunities in India. Given this, what should be your investment strategy?
Barring Adani Enterprise and Adani Port, all other Adani Group stocks aren't pointing at a clear direction. Adani Enterprise is heading towards 3,500 levels, whereas Adani Port is aiming at 850 levels, as per their technical charts. In terms of the cement stocks of Adani Group, Ambuja Cement is poised and is formulating a structure of higher high, higher low, indicating a rally towards 475 levels, whereas ACC continues to trade sluggish.
Thus, even as the group's effort to revert to pre-Hindenburg growth is gaining momentum, it would be wise for investors to remain stock-specific. Today on May 31, investors will track India's FY23 GDP growth data.
Summer is here. Notwithstanding some rain relief in northern India, the country is reeling under scorching heat. Meanwhile, a heat dome phenomena has been reportedly occurring in the United States since the past month. The unique weather condition is also common in northwestern India and some parts of China and Bangladesh during the summers. So what is a heat dome? Tariq Ahmed explains.
Summer is here. Thanks to global warming, even countries of the northern hemisphere around the globe are experiencing heat waves. And then there is the heat dome phenomenon that killed nearly 800 people in the US in 2021 and led to over 600 heat-related deaths in Canada during the same period. India, Bangladesh, China, and some other Asian countries are also waking up to this unusually hot weather phenomenon. Heat dome across northwest India had reportedly worsened the shortage of coal for power generation in April last year, raising the risk of blackouts in New Delhi. A heat dome occurs when a region of high pressure traps hot air over vast dry plains. As the heat gets trapped, temperature increases significantly in the area. The phenomenon can stretch over several states and linger for days to weeks, impacting lives of people and crops. Scientists point out that climate change has accelerated the phenomenon around the globe. It's also a cause of major wildfires around the world. As the heat gets trapped in an area, the vegetation quickly dries up, leading to wildfires. Heat dome effect also impacts crop production, wherein the yields can go down significantly due to the extreme heat. A case in point is its impact on wheat production in northwestern India. Heat domes also take a toll on human and animal lives. Dehydration, sunburns, dizziness, and nausea are the immediate impacts on health. Farmers and construction workers exposed to the sun are more vulnerable to the impact of heat dome. People living in houses made of heat-absorbing materials like asbestos and without air cooling are also at risk during such conditions. Experts suggest developing more green spaces and building houses with heat-resistant materials are the only way to tackle heat dome effects. Drinking a lot of water and avoiding outdoor activities are the short-term solutions.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
That's all we have for you today. We will be back tomorrow with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.